Hello, it's Callum Newman here for the Closing Bell Show. Your normal host, Murray Dawes, is away today, so I'll be filling in for him, and we're going to go over several things that have been going on in the markets and how it points to various opportunities in a couple of different sectors. And the ones I'm watching right now are iron ore, gold, and the Aussie dollar versus USD cross rate. So we're going to go over that and a few other things in this video. Pumped for a big, about 15 minutes, I think, so won't take up too much of your time. I've got my assistant, Belvedere, off screen. We've got lots coming up for you. So we're going to start with the Aussie dollar. Now, I know Murray has been talking about this with you. And if you look at my screen here, I've actually got a chart of the Aussie dollar. And if we go back to Feb this year, I'll just bring it up here. You can see that the Aussie dollar was pushing up towards 80 cents against the USD. Now, at that point, in terms of the market dynamics, we were thinking of, V-shaped recovery, reflation trade, commodities were starting to go up. So it was very easy to extrapolate from that trend and think that the Aussie dollar was going to keep going up. But it didn't. As you can see, it's had a big drawdown since, and the converse of that is the US dollar going back up and putting pressure on currencies all around the world. In fact, not just the Aussie dollar. Now, why does that matter? Well, for one thing, it makes Aussie miners more profitable. Now, I can tell you, when I was looking at a few stocks earlier this year, I was worried about the Aussie dollar going up because it crimps their margins. So that coming down actually makes those margins better. So that plays out in the resource sector. Now, you can see that via the price of gold, which I'll bring up here for Aussie gold miners, is now $2,482 an ounce. That's been bumping around $2,300 to $2,500 in the last 3 months or so. So it's making Aussie gold miners very, very profitable. Now, at this stage, though, the gold miners are actually not responding. And this is throwing up a really interesting opportunity. And we'll talk a little bit later about how you can tap into that. But we'll come back to that in a second, because before we get to the gold story, I just want to touch a little bit on iron ore because it plays into the Aussie dollar story. Now, if you've been following iron ore this year, you'll know that in the last couple of weeks, it's gone from over 200 US dollars a ton right back down to 130 at one point, and now it's bounced. Now, the interesting thing about this, when it hit, it fell extremely fast. I think it's even the fastest fall on record for iron ore to 130. We saw a lot of bearish commentary come, or I should say I did, about how China was slowing down. They were suppressing their steel makers to cut their emissions, and suddenly it was looking very bearish. So iron ore plays, big ones being Rio, Fortescue and BHP, really did get slammed in a big way that they don't usually do because they're big cash generating stocks. So it's very interesting to watch those right now, because as I just mentioned, iron ore has bounced, and it's bounced back to 150. So the question for the market right now is it going to hold that? Is it going to go up again, or is it going to go down? And I happened to be reading a good article the other day from a guy in the AFR, actually, who talked about Fortescue and BHP and Rio. And he made this point, and I just put a very bad red line around it. But he points out that even at 130, so even after a 40% drawdown in the commodity, they are still fantastically profitable at $130 a ton. Now, what that means to me is that we can put a bit of a line in the sand at 130 and say that those guys are still making a lot of money at that point. Now, they've pulled back, but if you follow them, they're paying big dividends. They've paid off a lot of their cash, paid off a lot of their debt recently. So now they're just creaming their iron ore reserves at really good prices. So if iron ore can hold where it is now at 150, they become very interesting stocks to get in at, because the market in general is pricing iron ore to go down from here. So the opportunity for me is that it may actually surprise by holding stronger than what the market expects. Now, that's always interesting to see. So not to say it's going to work, but the market is already negative on iron ore. So there may be an opportunity to pick up some stock in BHP, Rio, and Fortescue right now with an eye to that 130 to 150 mark holding. Not personal advice, but just an idea to think about in the context of the current market. Now, why also do I bring up iron ore? If iron ore holds up, then to me, it's likely that the Aussie dollar will hold up and that it should likely bottom out around where we are now. Now, it's always dangerous in financial markets to say things might bottom out, or because they often go much lower than you expect, and you do have to be very careful. But for my mind, I would expect the Aussie dollar to rally here alongside iron ore. And as long as iron ore holds up, and especially the commodity markets in general, I mean, we are essentially, or the Aussie dollar is, a play on commodities in China. So it'd be very interesting to see what happens from here, but that's my expectation. Now, that brings me to gold. Obviously, if we have an Aussie dollar being stronger or holding its ground against the USD has to pull back as well. So we could see from that same dynamic a run into Christmas or into next year in the price of gold. Now, the Aussie miners, while their margins are driven by the Aussie dollar price of gold, I would say the sentiment towards the stocks and the buying momentum is driven by the US dollar gold price. So if we see a big shift from US and world investors into US dollar gold, obviously that heats up interest in the gold sector, which makes for a very interesting dynamic for me because, as I alluded to earlier, Aussie gold stocks are not particularly expensive at the moment. And I'll just show you, this is a chart of the Van Ector's Gold Miners ETF. And you can see from 2019 all the way up to 2020, that was about mid-year 2020, the gold miners here had a massive run as the Aussie dollar fell, actually, and their margins just went through the roof. Then I still remember it clear as day. I told my subscribers around this time that it looked to me like gold miners were getting overcooked, and you can see that they had a very big drawdown into earlier this year. Now, I noticed that at the time, and we had a couple of trades around this point where I thought there was a bit of a bounce. However, the market being very tricky, I saw this happening and I thought it was going to continue. And you can see that gold, actually, the gold mining sector anyway, has actually pulled back. So I've cut back some exposure around here and we've seen it fall back down here. But as I showed you with that gold price, they're actually still making a lot of money. So I'm considering about what, if we do get a gold run in the US, what this might mean for the market. Is it going to push up from here or go down? Now, my expectation at the moment is that this is a really interesting opportunity to enter the sector because the companies are very, very profitable. So that protects your downside because they're making money. They've got lots of cash on the books. So that gives you a sense of security around the businesses. You know, they're not going to go broke or get into trouble from not being able to pay their debts or anything like that. And if we get a spark in the gold price, then the momentum will come back into the sector. So that's what I'm watching at the moment. And if you're interested in that idea, I'd highly recommend you also check out a recent presentation from my colleague Brian, who actually invests in gold exclusively. He runs something called the Australian Gold Fund. I've brought it up on the screen there. But he also runs our service Gold Stock Pro. Now, he has put together some amazing data on what shifts gold around. He shares it with us in the office, actually. It's incredible how much data he crunches on all the Aussie gold stocks. He knows which ones have the cash, which ones have the reserves. He has his own exclusive ratio that tells you which ones offer value relative to each other, because there is a ridiculous amount of gold stocks on the market in Australia. There's explorers, there's producers, there's developers. So it is actually a full-time job to go through them all because there's so many projects. So Belvedere, you'll be able to put the link in for the guys below the video to go and check out Brian's recent presentation. I highly recommend you do. I follow Brian and I've even followed some of his suggestions in my super fund with the bigger stocks in the ASX 200 because it's a really interesting opportunity here. So that's it from me for the closing bell show. Hope you enjoyed it. We'll be back next week, and we'll leave it there. Thank you very much.